Welcome to our third segment, forecasting, benchmarks, and assumption. What we do here is that we've talked about the business model. We talked about the fact that you need to use your income statement or your financial record to help you gather insights into how your business has performed over time. Once you have that financial information and you start to understand some of the trends, how your numbers sort of respond to different situations, you can then move to the point of creating what we call a benchmark or assumption that will help you now to prepare the actual forecast. Let's go ahead and talk a little bit about benchmarking and assumptions so you have a better sense of what I'm talking about. We're going to start with first identifying or defining what a benchmark is, and then follow up with talking about assumptions. To initiate the forecast process, you must establish what we call operational benchmarks. A benchmark helps you, the owner or founder, evaluate the performance and also to motivate your employees. What is the definition of a benchmark? Ideally, you want to compare your financial results to available industry statistics and best practices from competitors. It is a moment, as I like to call, of being aspirational. So let's say you have a competitor out there that you really love. You love what they do. You want to be just like them. Well, you need to start off trying to figure out what they do. How do they run their business? What do they seem to get right? What do they seem to get wrong? When they do make a mistake, how do they fix it? Since most of us are running private firms, you can't see their actual numbers. But if you spend time really looking at how their business operates, you can sort of back into what they're spending on advertising maybe or marketing, what they're spending on social media. You may be able to determine what they're spending in terms of labor costs by just walking in their stores and doing a quick head count to see how many people are working in their stores. Their hours of operation, so that you can figure out how long they're open and sort of estimate some of their other expenses. You know probably how much they're paying for rent because you've done research on the area. So you can sort of figure out a little bit about what they're doing with regards to running their business. And this is what we mean by benchmarking. You try to find a standard out there, someone you want to aspire to, and then you try to determine what they're spending in their business, how much they may be making in their business. Also, you look at how they're running their business and see if you want to mimic some of their best practices. So there's 4 types of benchmarking here. One is what we call internal. And that means I, as a business owner, I take a look at how I run my business today, and I ask myself, am I doing a good job? So what I may do is do a customer survey. That would be considered establishing an internal benchmark. I do a customer survey where, and in this case, I do a professional one, not me just walking up to my customers and asking them how do they like doing business with me. Instead, I would do a formal survey with a series of questions on there. You can have a survey developed maybe by a college, local college for you. That can be done inexpensively. And because these are very common to do, a nice customer survey. So you can give the customer survey to your most prized customers and actually get some feedback from them on how well they think you're doing business, and have them also rate you on your level of service. If they're saying, let's say you achieve a rating that's very high and you believe you can maintain that rating, then that becomes your internal benchmark. So going forward, you do a survey maybe once every 6 months to check to see if you're still getting that same rating. If you're not getting that same high rating, then you want to take action. Maybe I want to train my staff a little bit better. Maybe I want to see if I have a problem employee. So I'm going to take action to see if I can return back to that high standard. So again, a customer survey is one way of establishing what we would call an internal benchmark. External standards. I can find this by paying a little money. There's some services out there that will allow me to see what other people are doing in my industry. These are standardized reports that are done that are looking at retail industry, looking at the trucking industry, looking at the beauty care industry. And what I can do is take a look at those records and compare my records to those numbers, and that will give me a sense of whether or not I'm doing well as a business. Some of these services will also teach you how to make the comparison as well. So it's money that's well spent. Performance, or what we call quantitative statistics. Typically, quantitative means that I have to do some calculations. So in this case, maybe I do need to learn how to calculate what we call our profit margin. Maybe I need to calculate how much I have in terms of debt within my organization, so I can see again whether or not I'm exceeding the normal standards. Maybe I'm too low in profitability. Maybe I'm too high in debt. And so there's some calculations that we'll talk about that I can do that gives me a sense of where I may be. Practice qualitative activities. What that means is that it's focusing on people, your work processes, and technology. It means I start to become someone who reads a little bit more. I expand my reading. So I start to read about technology and changes in the technology area as it relates to my industry. I start looking at how I conduct business. We call that work processes. I look at how I treat my customers. How long does it take me to greet the customer when they walk through the door? How long does it take me to service them, help them find what they're looking for, and then collect their money and hand them their item and then collect payment from them? How long does it take me to do that? Is there something I need to do to speed that up or improve the quality of that interchange? And then people, am I doing right by my people? Are my people comfortable in their level of expertise? Are they getting the training that they need? That's what we mean by qualitative activities. So benchmarking is very broad. Again, it looks at internal issues, it looks at external issues. It also takes a look at specific statistics that help you better gauge how your business is performing. It also has an element of observation, where I'm spending time really observing what is happening in the business community to make sure I'm staying still relevant to the industry and I'm still a viable business. Here's some specific examples of what we call quantitative benchmarks that I can use. Let's start off with the item to the left. I can look at what they call net profit margin. That's how profitable I am, and I can actually calculate that number. That is profit divided by sales. So I take that profit number off my income statement and I divide it by the sales for that year, and that gives me profit margin. I look at efficiency, and this is something that we see in the retail community. How efficient are my people on the floor? How many dollars in sales do they generate per employee? That is a standard measure in the retail industry. If you haven't used it before, you may want to. It gives you a sense of, the return on your investment. I've hired this many people. They're working an hourly wage. They're supposed to be helping me sell items to customers, and now I want to measure how much they're generating in terms of sales for the number of people that I've hired. Cash reserves. How quickly am I going through my reserves? Most business texts will tell you that you need to have at least 6 months of costs in a cash reserve. If you start to see that cash reserve, which is typically held in a separate bank account, if you start to see it diminish, you want to calculate how quickly it's diminishing, because when it runs out, it's gone. And so you may not have your rainy day fund when you need it. So that's something you need to pay attention to. Expenses less than a certain percentage. What does that mean? It means that maybe I want my labor costs to represent only 13% of my sales, meaning the labor number when divided by sales represents 13%. Maybe I want it to be less than that. What it may mean is I need to cut down on overtime so I can bring that percentage down to 11 or 12%. For every percent I save, I can increase my profit by an equal percentage. Monthly revenue growth. How quickly are our revenues growing month after month, or year after year, or quarter after quarter? This is an active way, or when we talk about a quantitative measure, this is one of the common quantitative measures people look at. How quickly are my revenues growing? Are they growing from quarter to quarter? Are they growing from year to year? And if they're growing, by how much? So that's something that I can calculate. Now let's switch gears. We've been talking about benchmarking. Now let's talk about some of the common assumptions that people use in the business community, and also some of the sources for that information. Let's say I want to look at sales growth. I want to be able to take a look at what's been happening with my business with regards to revenue. Source of that would be my financial record, my income statement. So what I want to do is take a look at income statements going back in time. If I've been in business 3 years, I want to look at 3 years of income statement. That would be my best source for me gauging how strong my sales have been climbing or if there's been some decline. Pricing. Revenues are driven by price. So how do I know if my pricing is good? How do I know how I need to price in the future? So best source there, of course, is looking at competitive pricing. How can I do that, Adam, when I can't see my competitor's price? Well, if I'm a retailer, I can walk right into their store, or I can send maybe one of my workers into their store and take a look at their sales price, see what they have on a tag, see how they're pricing their items compared to how I'm pricing mine. Today, many people are online, so maybe I need to go out to their website and see how they're pricing. Take a look at national pricing by some of the larger companies by going out to their website, going out to Amazon, looking at how Amazon has priced similar items. So there's data out there. I just got to know where to look for it. Customer retention and acquisition. Sources for that is that I take a look at my customer surveys. That's the reason why I want to look at surveys. I want to not only survey my current customers, but I also want to serve customers that I may have lost to find out why they may have moved on to the competitor or why they're no longer buying when I'm selling. Verifying fixed and variable costs. So now we're getting to that accounting side, right? So I do need to understand what my costs are. So I need to take a look at my documentation. I need to look at my lease. I need to look at contracts that I put in place with suppliers to make sure that I understand any future cost increases that may be associated with the contracts that I've already signed. Operating expenses. What I want to do there is that I don't want to just group all my expenses into just one number and say I normally have to pay out $10,000 a month. Okay, that's nice to know, but which categories are the most impactful? I need to be able to itemize my expenses. The key here is that I want to itemize my expenses. I want to see how much I'm paying for leases. How much am I paying for labor? How much am I paying for insurance? All of those items are very important, and so itemization of my expenses is one of the key things I want to do. So we've covered a lot here, haven't we? So we talked about benchmarking and we talked about assumptions. Again, these are the foundations of any forecast that you can do. We talked about the aspirational side of the forecasting. You have to believe the business is going to be here next year. That's the place you got to start. But after you've gotten that clear, you want to focus on how do I create my benchmarks? How do I create my assumptions? And I've given you some sources of data that you can use. I've given you some best practices that you can use in order to do that. What we're going to do next, which will be our final segment, we're going to pull it all together and show you what a forecast can look like.